let's say that I got into crypto in 2025. That was my first buy. I bought a bunch of times, or I bought once, regardless. And all throughout 2025, even Bitcoin, the king of cryptos, have just gone down and down and down. What would I be doing now and in the next couple of months? Would I be holding still? Would I be taking profits? Or would I be lowering my cost average? My answer, and before I go any further, I'm not a financial advisor. It's just something that I understand. I've been in this market for a very long time. I've made millions of dollars in crypto. And I'll tell you this, anytime that we see the market get to a point where the fear and greed index is under 20, 25 for months at a time, that ends up being one of the best buying opportunities when you zoom out, you have patience, and you think into the future. You look back and go, wow, I wish I bought more. Now, you may have heard this from me, or maybe you're new. Let me know in the comments if you're new here. I'm curious how many of you have been here and how many of you are new. So a 1 if you're new, a 2 if you've been here watching me for a year, 2 years, 3 years. Now, that may sound like common sense, right? Yeah, you'd want to buy low. But the reality of it is people base their buying off of emotions, and most people will buy crypto when they're up hundreds of percent already. You'll start to have a slow grind up for months or a year, and then you'll start to get something called FOMO, fear of missing out. So then what do you think happens, right? People will go all in. The excitement will make them put more money than they should have, and the market finally peaks. And it's not a peak that lasts forever. It's a local top is what they call it, because eventually a lot of cryptos will have a higher top, especially Bitcoin, Ethereum, Solana, and many others. One of my favorites is WorldCoin. Go check out WorldCoin if you haven't yet. But most people, they'll base their investing decisions off of emotions, and they'll buy more when things are green because things are going up and they're making money. But when things are going down, they typically sell at a loss. This is a retail thing. Retail meaning an everyday investor, the normal person that's most likely watching this. They will sell on the way down. They will buy on the way up. And we'll make videos in the future. It's undoubtedly going to happen. It already happened numerous times throughout my 11-year investing career in crypto, where I'll be talking about, well, where were you when I was telling you at this date and this date and this date? Where were you when I was telling you that there's massive opportunity right now? And why did you decide to wait? And you wonder why you only got 100, 200, 300% returns. Well, that's because you decided to wait till everything was already going up. And so I can't give you advice because I'm not a financial advisor, but if I was talking to my best friend, if I was talking to my family, I would tell them this. Over the next couple of weeks and couple of months, regardless if we go a little bit lower, it looks like we're going to bottom fairly soon. We have a lot of things happening in 2026 that the regular person doesn't understand, nor do they even know that it's happening. We have the Clarity Act, which gives clarity for the banking institutions and businesses in general, right, to start building in the crypto space and not have to worry about the SEC coming after them. As an example, Nike will make a token, and you'll see Chipotle making a token. They're definitely going to need it because they're hurting. And you'll see reward systems built and special things if you're holding the token. And you'll see a lot of fluctuation in price, obviously, but there's a lot of things that are going to happen with non-fungible tokens. They're called NFTs, essentially a digital version of a picture or a playing card that has a digital stamp that can't be copied like you can copy a picture on the internet today. So many different things like tokenization and what AI is going to be doing with the blockchain, and how AI can't succeed, or financial AI can't succeed without the blockchain. People don't understand that the system that we have today is not, it's agrarian, it's archaic, it's not going to keep up with what's going to come with AI and the growth of AI and the technology boom that we're going to see. So knowing that all this is happening, knowing that Trump is going to put in someone that is going to be lowering rates, we know that we have a new Fed chair coming in just a few months in 2026. And as much as we can argue back and forth that we don't know exactly what that's going to entail and who he's going to pick, it's really irrelevant because we know that he's said a million times he wants rates to come down to 1% if possible. Whether it gets there or not, that's to be determined. But we also have to understand that the United States government has to refinance $10 trillion in debt. That's 30% of our national debt, or 25% of our national debt, close to, right? I don't know the exact number, but it's a lot of money. We have to refinance. And that means that, think about you having to refinance your home. Would you want to refinance your home at current interest rates at 5 and 6%? Or would you rather refinance your home at 1, 2%? Well, what do you think the U.S. government and the Trump administration is going to attempt to do? They're going to attempt to lower rates as much as possible, because in 2026, they have to refinance that $10 trillion. So if they lower rates, money becomes cheaper. When money becomes cheaper, more people have access to money. They become more risky with money, and they get into risk on assets such as cryptocurrency. Now, we thought we were going to see that happen a lot sooner. We thought we were going to see it at the end of this year. Well, it looks like we have to wait a little while longer. But those of you that are just getting into crypto, this is an amazing opportunity for you. And for those of you that have been in crypto, that have bought at much higher prices, understand that, and I'll use some simple math here. If you buy something for $100 and it goes down to $50, and then you decide, I'm going to buy another one of those for the $50. Now you own 2 of the tokens, one at $100, one at $50. You averaged your cost to $75. So now when that token or that crypto or stock, whatever it is, goes back up in value, you're now in profit or break even at 75. You don't have to wait till 100. Right? So the more that you're buying on the way down, the lower your cost average becomes. And as this market eventually turns around, which no one knows when that day is, but eventually it happens, you've made a bunch of average cost. And a lot of people will say, well, why don't you time it? Well, because no one can time the market. And if they tell you they can time the market, they're lying to you. Period. End of story. So I would rather dollar cost average as these prices hit these historic lows, understanding that I can lower my cost average like I did on WorldCoin from $1.20 all the way down to 56 cents over the last couple of months. That means that when WorldCoin goes from 49 cents, and even if it goes to 30 cents or 20 cents, I'll be buying more. But if it goes up from here, I'm in profit or break even point at 56 cents, only 7 cents away from where it is today. But if I didn't dollar cost average that project, I would have to wait to break even at about $1.20, where my first couple of buys were. So this is the power of dollar cost averaging. And those of you that are doing this, those of you that understand this concept, although the patience is the hardest part, it does take time for this stuff to play out. You're going to look back months or years from now and go, wow, I'm up hundreds of percent or thousands of percent, much more than my stock portfolio gave me over the last couple of years, much more than my gold or silver portfolio gave me over the last couple of years, much more than my real estate portfolio gave me over the last couple of years, because that's the kind of boom we're going to see in crypto. And we haven't seen anything yet. I'll leave you with this. It's a $3 trillion market, not even, like 2.8, 2.9 trillion. To give you an example, just gold alone is 30 trillion. Just the other day, $3 trillion came out of the gold market cap. That's more than the entire crypto market cap, including Bitcoin and Ethereum. So if you think we're late, you're out of your fucking mind. Take advantage of this or cry later. Make sure you guys like, share, follow. Check out the Telegram in my Stan link. And also, there's a link in there if you guys want to understand money for the book called The Bitcoin Standard. If you go check out my Stan link by going to my profile, there'll be a little link. The link is safe. I promise you that. And you can go in there and you can look at the Bitcoin Standard. There's also the Creature from Jekyll Island, which explains the monetary system, the printing of money, and how it all came about. So you can understand what they should have taught you in school. Go check it out. Make sure you guys like, share, follow. We'll see you guys soon.